Hey, what's going on, everyone? This is Sawcruhteez Streamz, and today I am your co-host, Sawcruhteez. I am joined by Gabriel Harber, and we will be doing another live coaching session today. For anybody who hasn't seen any of the past live coaching sessions, what we do is zoom into a really small time frame so that we can get a number of entries and exits signaled in a short period of time. And that is what I believe is the best way to learn, the best way to practice. Once you have a strategy, what's most important after understanding how the strategy works is developing some trust for that strategy and developing some confidence. And if you are one who likes to trade higher time frames like myself and Gabriel, like the 4-hour, maybe even up to the weekly, it can take a lot of time to get that experience. If you're only getting an entry or an exit signaled once every month or so, then it's going to definitely take some time for you to build confidence and trust in a system that you are trading. And the best way to combat that or to overcome that is to use the exact same rules on a smaller time frame so that you can get multiple entries and exits potentially signaled in the same day. And that will really speed up the learning process, as well as really help to gain confidence and trust in a system in a much shorter period of time than if you are to trade the higher time frames. So that's what we're going to be doing today. We're not going to be trying to make any money. Our goal is not to profit today. Our goal is to learn and to gain experience. So with that being said, how's it going, Gabriel?
Hey, how's it going, buddy?
I'm doing well. It's a nice day here in the Rocky Mountains. Just got back from the gym and feeling pretty good. Woke up feeling a little rough around the edges, but feeling a little better now.
Now, how is it that you come back from a dream vacation, Vegas and the working man's Bitcoin cruise, yet the only thing you say you came back from was the gym this morning? Like, there's no suspense in that.
Well, I guess I spent some time talking about the trip yesterday, sharing some
Oh,
pictures and some tweets. So, yeah, for anybody who didn't see that, I did have quite the trip. I was gone for about a week. Went down to Vegas, spent the weekend, got to go see my sister in San Diego, and then took off on the Working Man's Bitcoin cruise, where I got to meet a lot of great people and give a talk about the 10 pillars of Bitcoin. So that was quite a bit of fun, but now I'm kind of back into the normal daily routine.
very good, my friend. And I am excited to get back into this as well. I know you put out the training video practice round that we did when we were first discussing doing this project, and we wanted to try it out to make sure the concept would actually work. So I hope everybody had a good time watching that. And before we get started, I figured I would just share with all of you some of the lessons that I've learned over the past couple of sessions that I've been working with Sawcruhteez doing this project, because there's a lot of them, and I'm sure there's going to be a lot more. But I think the most important thing, and it's crazy too, because you and I discussed beforehand that when you sit down to trade, you got to have a very clearly well-defined strategy that you're going to be trading with. It doesn't even have to be a good strategy, just needs to be well defined, so that way you're not left guessing as to what it is you're going to do at any time. Because you can adjust a bad strategy, but you can't adjust anything if you don't even know what it is that you're actually doing. And I still found myself sort of at a loss to define what was a trading event for myself on a number of occasions, which really highlighted a deficiency in my trading style, which would not have been brought to the forefront nearly as quickly if I was trading on, say, the daily or the weekly charts. It might have taken months or years before I even realized, hey, this isn't working out the way I needed to, versus exactly what you've been hammering home. If you do this on the daily, on a 3-minute chart, the 2-minute chart, the 1-minute chart, you might not make money. In fact, you probably won't at first, because it's going to seem a little overwhelming, but you're going to get those reps in, like batting practice, and you're going to get these deficiencies in your game exposed so you can shore them up before you put the big money on the line for whatever time frame it is you generally like to trade.
Well, I'm sure glad to hear that. That has definitely been the objective of this, is not to really, like I said, make money or show off any, skills or anything like that. The objective has been to help Gabriel find the strategy that works best for him. And and it's important to figure out what works for you personally, and not to just go with the system that I trade because I'm, the one that you follow or whatever. It's really important to try out different strategies and see what resonates with you best, and also trying out different time frames. That's really the hardest part about learning how to trade, is figuring out which strategy really resonates with you, which works well. Like, are you the type that likes to buy dips, or do you like to buy breakouts? You need to figure that out. It just takes a lot of practice. And like Gabriel said, on the higher time frames, it may take a year to really have some of these really important leaks exposed. And that's where I'm such a big proponent of taking a very, very small amount of money to the lower time frames and seeing what comes up there, because that will, if you're able to start plugging some leaks and gaining some confidence in your ability to execute, then when the time comes to when you're getting a signal on a higher time frame and you're ready to execute, now you've got this practice. And just like Gabriel said, it's like batting practice. When the pros go to batting practice, they're not trying to hit every ball out of the park. What they're doing is, making good, solid contact and having their coach watch over to see, if there's any possible deficiencies in what they're doing. And a good coach isn't going to try to give every baseball player the same exact baseball swing. No, they're going to work around the natural abilities and potentially deficiencies that one may have. And that's where it's really, really important that Gabriel develops his own strategy that's based on, not necessarily develop his own strategy, but come up with the strategy that works best for him, and also the right time frame. So right now we're going through different strategies to try to see which maybe works best and resonates best. And then after that, you can take it to higher time frames or different time frames to see what works best with your schedule and your ability to focus for long periods, or if you're just looking to swing trade and not have to focus too long, too hard on the charts every single day. So these are all things to be thinking about, and hopefully I'm glad to hear that Gabriel's been getting a lot out of this already, and hopefully the audience is as well. And if you do try to go to practice like this, do not risk a significant amount of money. Risk less than 1%. And if you've only got $100, literally take $1 and send it to BitMEX and use that to trade. And people out there may think like, oh, well, that doesn't sound like any fun at all to trade, a $1 position. And that's the point. This isn't supposed to be fun. This is supposed to be work. This is supposed to be practice. And that using such a small amount of money, that removes the maybe some of the allure to trading. And that's really important, because what that's doing is taking away that gambler mentality, that gambler part of your brain that feels like, oh, $1, who cares about trading those positions? That's what you should be using, is such a small amount that you don't even care. Now that removes a big part of the emotions and just allows you to get to work. So I'm definitely glad to hear that you are getting a bit out of this already. So why don't you go ahead and tell us what strategy, what are you going to be going with today for the live trading?
All right, so the strategy that I'm going with today is the strategy that I have also been using on the higher time frame, the daily chart that I trade. And to me, it's a pretty simple strategy. I know that you traded the Sawcruhteez the last time that you and I were doing these videos, and you were a big proponent of keeping it that bare bone simple. And while I agree, Sawcruhteez is an amazing system, I figured I would do something a little different that reflected a little bit closer to what I trade on the higher time frame as well. It does contain a little bit more subjectivity, but I figured this is also a good opportunity for you to offer some correction when you see potentially some weaknesses. If I were to just trade the Sawcruhteez, it might not be as beneficial to me. So what I'm going to be doing is 3 very simple things. The first one is, can I identify a clearly defined chart pattern? And this is something that I have been working a lot on. I know some of the conversations you and I have been having in private, you know all about it. You had issued me some homework, namely 2 books, Technical Analysis of Stock Trends by Edwards and McGee, and Diary of a Commodity Trader by Peter Brandt. 2 of the best books on pattern trading that are out there. I have been absolutely devouring those books, as well as Thomas Bulkowski's work on thepatternSite.com. And you've mentioned before that it's very important to have an area that's a no trade zone. When am I looking at the chart and I can, very quickly and easily identify there's not a trade on the table that I want to be in right now because I don't feel good about the direction either way of the market. And that is what I like chart patterns for. Chart patterns generally tell me if there is some sort of consolidation or accumulation occurring and prices ranging in a particular direction. And they also give me a point where I can look to and say, this is the area where if I get a breakout, I'm going to be looking to enter into a position. It's just a matter of timing when that breakout occurs. So that's the first thing I'll be looking at is there a clearly defined chart pattern? The second thing I'm going to be looking at is there a significant level of horizontal support or resistance? And that would represent another no trade zone for me. If I see something that has acted as support or resistance on a number of occasions in the recent past, then that tells me I may want to wait until I get a break and follow through before I enter into a position. And then lastly is your favorite, the sequential. So if I don't have a chart pattern that's telling me there's not a trade on the table, and I don't have a horizontal line that's support or resistance telling me there's not a trade on the table, then I'm going to be looking for an entry that lines up with the sequential. And I hope that wasn't too complicated. I felt like I kept it pretty bare bones and pretty easy to identify what the rules of my trading system are. And I'd love to hear your feedback on the trading system that I've been using.
Yeah, I like it. So one thing to clarify, the horizontals, if you identify 2 clearly defined horizontals, you're not going to be using that to like buy support and sell resistance. You're just going to be using that as a no trade. Is that correct?
So if I see, for instance, let's say we have a well-defined area of support, the price comes down and I'm getting a signal from the sequential that there would be an entry. I would choose to pass on that signal until I have a break of that horizontal support and then follow through, which of course would be another red number trading below a red number. Conversely, if price bounces off of that area of support and starts to go to the upside and fulfills the criteria of the sequential, then at that point, I would be willing to enter into a position. So it would be about the direction of the market. If the horizontal I've identified is acting as support, then I would not want to be entering positions to the downside because those would be going against the area of support that I've identified. And conversely, if the sequential indicates there's a trade to the upside, but I see an area of resistance above that is very clearly defined, then I would not want to enter the position to the upside until it either breaks and has follow through, or it bounces off as resistance, and then I get a signal from the sequential in the other direction.
I like it. I like it a lot. And that's these are things that I've thought about myself, both patterns and horizontals to identify a no trade zone with the sequential. And it will be interesting. The one thing that I will be interested to see is what you consider a well-defined horizontal. There will be, some times where it may be a little bit tricky, may make it a little hard to pull the trigger if it's like, well, there is this horizontal here, but is it well defined? So these will be great things to get into. And so for anybody that's not familiar with the sequential, it is a strategy that I put together and shared in episode 2 of the live coaching sessions. There is a playlist, so if you are wanting to learn more about how I trade the TD sequential combined with the parabolic SAR, then go ahead and check that out. Otherwise, it sounds like we will be basically getting into that today. So I guess without any further ado, we're ready to get cracking.
Man, we were just talking about cracking before we started the show. It's a little bit of a touchy subject for you right now. All right, so I'm not sharing my screen right now, am I?
Nope.
Okay, so I'm gonna go ahead and click to share. Are you seeing me right now?
I am, and I need to minimize. Okay, that should be good. Let me just double
See
check.
the screen now in front of you?
Yep, I can, and I just need to make sure it's the right size. 1 second. Yep, everything looks good.
All right, very good then. So, the first thing I noticed, and this was, by the way, this was one thing I left out when I said that I have 3 rules. I don't know if I consider this a rule as much as it's something that you and Tyler Jenks both taught me to do, which is to always look at what the higher time frame is doing to potentially inform you as to what the lower time frame might be doing in the near future as well, not necessarily as a signal or as a reason to enter or not enter a trade, but just so you understand the overall direction of the market. And to that end, I actually do have a question for you, because I wonder, like, what is your intention or your goal of looking at the higher time frame in a situation like this, where you have a set of clearly defined rules and you have a time frame that you're going to be operating on? What would you be looking to use that higher time frame for?
Great question, and that's something in the sequential. There is no need at all to consider a higher time frame, and it can actually be counterproductive. If you are trading the sequential, it's based on the TD sequential and the parabolic SAR on the same time frame, and therefore you really don't even want to refer to a higher time frame, because it will start to get confusing if one is on a sell and the other is on a buy. So when I was trading a couple weeks ago, I was all the way down to the 1-minute chart, and you notice I didn't even refer to a higher time frame. I didn't even want to know what was going on. I just wanted to execute on that time frame that I was trading. But there are other times where if trading other methods, that I will generally, if I'm analyzing a market, I want to figure out, am I, bullish or bearish? And starting with the higher time frames and then zooming in is a really good way for me to just see the trend, and the short and the medium and the long-term trends. Now, that won't be relevant for something like the sequential, but for many other things it will be very relevant. So definitely a good question, and one where I would just be sticking with one time frame for this.
Okay. Now, this is something I've thrown around, and I'd love to hear you. I'd love to hear you dissect this idea. It is that when I'm trading on the lower time frame, would it be viable to use the higher time frame in order to inform your position size? So it's not giving you entries or exit signals, and it's not determining what the action you're going to take is on the lower time frame, but it is determining how much you might be willing to risk because of the additional upside or downside that might be baked into that position based on what the higher time frame is telling you.
Yep, that's very, very reasonable, and is a little bit more advanced. When starting out, I would say to just basically stick with one position size so that you're not having to add to the decision-making process. But once you get really comfortable with the decision-making process and with executing, and being pretty automatic with the decision-making, at that point, definitely could be a good idea to look to adjust position sizing based on what you're seeing on a higher time frame.
All right, then I like that advice. I think that is a great idea for me, especially because, raise your hands if you're new and still a novice at trading these lower time frames. I know you can't see me, but I'm raising my hand. I can see myself in the little video feedback thing, but I just realized you folks can't see me anymore.
Yeah, they can.
But,
they can see you.
Okay, they can see me?
Yep. They're wondering who's the rabbi, and saying that your hat's too big for a rabbi.
Yeah, this is my triple XL yarmulke that I bought at the Indian convenience store on the corner. So, okay, so what I'm going to do here then, based on that advice that you just gave, because I think it is very sound advice, until I feel like I can basically wake up, throw on a pair of pants, and trade the 3-minute chart without giving it a second thought, because it's so second nature to me, we're just going to go ahead and get rid of this 15-minute chart here on the bottom and only have the 3-minute chart pulled up.
Perfect.
Because, like you said, the lower time or the higher time frame is more advanced, especially if you're talking about adjusting position size. I do want to give one piece of advice, because I can't help myself. I'm kind of an addict. If you are trading right now, this to me looks like a pretty clearly defined descending triangle that is developing. So do with that what you will. Any thoughts on that before I close this 15-minute chart?
Yeah, definitely something to keep an eye on. Patterns on lower time frames are definitely important to me, even though it's only the 15-minute. If that breaks down, I would be using it to measure a move. It looks like be about $200, potentially going to 8,000 if we break that down. Something to keep an eye on.
All right, let's go ahead and close this bad boy.
So it looks
All
like
right.
there is a 2 below a 1. Tell me what you're seeing here.
Yes, so the 2 is below the 1, and I am liking the way that this looks right now, except the parabolic stop and reverse point is still below the price, but it is coming close. So I'm going to start now thinking about where I would be entering this position on a 3 below a 2 or a 4 below a 3, even a 5 below 4. That would be my last position to enter. I don't like getting in on anything lower than a 5 or higher, I guess, depending on how you want to put it. And if price does continue downward here, then I think it's very likely that the parabolic stop and reverse point gets triggered within the next 6 to 9 minutes, maybe even the next 3 minutes. And so I'm going to go ahead and get my measuring stick here.
Before you do that, should we be looking for patterns or horizontals, since those were 1 and 2 on the list?
Oh, yeah, I'm sorry. I looked. I did not see a pattern that I could clearly identify. Do you see anything?
Yeah, it looks like a pretty sweet bear channel to me. Want to pencil that in?
All right, bear channel is not something that I have a lot of experience with. Haven't got to that point in the book yet. All right, let's go ahead. Parallel channel. From the top here. Something like that, you think?
Yeah. Yeah, looks pretty sweet.
Okay, yeah. And I guess that is in line with what we saw on the 15-minute chart. Not that that particularly matters right now, but okay. So which measuring tool do you use? I've actually only done it on the mobile version. So
go up to right above that arrow, click to the side, and then price range.
Price range, okay. So.
And you'd be looking for a short, right?
Yeah.
So in that case, we wouldn't be concerned about the distance from this SAR, since this SAR is bullish. If we do go short, the SAR would reverse, and therefore we would be wanting to know, where would it be if this reverses, right? Does that make sense?
That is an astute observation, Senpai. Thank you very much.
So can you identify if the SAR were to reverse on this candle, where would the new SAR print?
I have no idea. You want to talk about advanced concepts? You want me to put the SAR up in my mind? Okay, sure.
Well, I guess that's something we'll have to work on a little bit, because it is important to have a pretty good understanding of how to calculate it mentally. So there we go. Notice how it printed right at the top of that 2 and that 3, essentially right at the extreme point of the prior move.
Okay, so I would want to be getting in price range. I'm going to put a limit order here at 8323. Does that sound about right?
I'd put it a little lower. Basically, yeah, anywhere right in here.
Okay, we'll do 8319.
Okay.
Okay, so that is a 0.44% move.
Yep.
So that would be expressed as 0.0044, if I'm not mistaken.
Yep.
And then, by the way, you should all be watching Sawcruhteez BitMEX tutorial when it comes to leverage. He goes over this stuff. It's fantastic.
I appreciate it.
So we would do, I have my calculator out here.
So 2% of our bankroll is 0.000204.
I need to get my...
And I can calculate it for you if you want, but I'd prefer that you go ahead and go through it.
I had to pull out my phone real quick. So we do percentage of bankroll that we're willing to risk, which is 0.000204, divided by 0.0044, which is our risk percentage expressed as a decimal. Yep. And that says we should be risking 0.046 BTC.
All right.
So we're going to come over here. And how is it that we determine how many contracts we actually get?
So what'd you say? 0.0463. So that's the amount in Bitcoin. So we just multiply that by the current price, 0.0463 times 8321.
8319 is what we want to enter in at.
Okay. And now that we're even getting a better price, we might as well enter in right here, I would say, at 8321.
So it says 385 contracts.
Yep.
So we'll just put in 385 contracts, double click that. And I do post only, is that okay?
Yep, absolutely.
Sell short, sell.
Order canceled. Participant do not initiate order hat. I don't know what in the heck that was.
I've never seen that before. Have you?
No, never. Maybe. Yeah, just go ahead and enter it again. The price might have moved right through us before we got the chance. Okay, now we've got an order submitted.
So that order was canceled down here? Yeah. Okay.
Yeah.
All right. And if I'm not talking a lot at this moment, it's still because I'm one of those people who on BitMEX, it's still, even though I've been using it for a little while, it gets a little overwhelming. I like to kind of focus in, make sure I'm clicking the right buttons, not accidentally fat finger my entire account, and move the price of Bitcoin like $5,000 down.
Yeah, we would.
I don't want to be one of those whales that everyone tweets about.
Yeah, I think we'll be okay with that bankroll size.
By the way, I'm going to shamelessly plug my Twitter account right now, if that's okay.
Go for it.
It's at Crazy Gaby. Crazy like the word crazy, Gaby, G-A-B as in Bravo, E-Y. And also, if you folks are not subscribed to my YouTube channel, I put out daily videos. They're usually about 5 to 15 minutes in length. They're a lot shorter than his videos, I'll tell you that. So if you're pressed for time, no, I'm just kidding. But definitely watch Sawcruhteez videos too. I'm basically just repeating back a lot of the information he's taught me along the way, a lot of things that I'm learning in the books that he's had me read as my homework, and it's allowing me to really sort of solidify and reinforce these ideas myself, as well as pass it forward to people, pay it forward to folks who might be looking for a little bit of additional information as well. They say the best way to continue learning is to try to teach it to someone else, and however horribly I may be teaching it, I still am giving it my best. So my YouTube channel link will be in the description below this video if he hasn't already put it in there, and I would love it if you'd stop by and give a couple watches and maybe even leave a comment or two. It'd be awesome.
And let's go ahead and make sure our stop loss is
entered. We're going to get that now.
Perfect.
So our stop loss is going to be 8355. And this is a little trick that I like to do, which I'm going to put my stop loss in as a limit order to start. And I'm going to click reduce only so that way I don't get entered into a new position.
And you'd want it to be a stop limit.
Oh yeah, stop limit. I thought I was on that. I had to figure that out real quick. There we go. So 8355. 8355. Close on trigger and post only. And so then I put it in as a limit order, a stop limit, and then I put the market in for about $3 higher. You think that's enough? Or the stop market for about $3 higher?
Yeah, that's definitely reasonable.
And I also make sure I have close on trigger. Trust me, you haven't really been a BitMEX trader until you accidentally forgot to click close on trigger, and you have had to deal with the full ramifications of your action. So it doesn't matter how many times you say to yourself you won't do it, you will forget to do it at least one time in your time trading, especially if you're going to practice on lower time frames. And you just got to deal with it. You bend over, you take it, and you learn from it.
Yep, absolutely. Best thing, if you mistakenly, if you don't have close on trigger and your position's already exited, then this could open a new position, the stop market. Just because it says stop doesn't mean it will only stop you out. That can be used to enter positions, specifically if you don't have close on trigger. So when that type of thing happens, best thing to do is just immediately reverse that, immediately exit, regardless if you're up a little bit or down a little bit. I've had, I don't know how many times I've misclicked on BitMEX or other exchanges changes, and sometimes I'm, trying to let it ride a little bit so I don't lose some money. And it always is best to just go ahead and fully reverse any misclicks, and that will happen not only on BitMEX but anywhere. If you're trading actively, there will be misclicks, and that is kind of part of the cost of doing business. And the reason why Gabriel entered a stop market as well as a stop limit is on BitMEX you get paid for limit orders. So if you're able to get out on a limit and in on a limit, then you're getting paid to enter and paid to exit, which will go a long way to help the profit and loss or offset the costs. Like basically, if you're entering and exiting at the same price with limit orders, you make money on BitMEX. And the risk is if you're only using limit orders, you could get blown through there where you don't get filled, and then you could find yourself really underwater and in up shit creek without a paddle, we'll say. And so therefore, if you're wanting to use a limit order to exit, having a backup market order to exit, where if we don't get filled on the limit, we've got a backup order that's going to get us out. That's a really, really good way to go about it, to try to get the limit orders when you can, and then when you can't, you've got that backup. And it's pretty darn amazing how that thing caught support perfectly at the bottom of that channel. That's just really beautiful.
Yeah, it is, absolutely. I'm glad you saw that bear channel, because I'll tell you what I'm seeing, or rather what I would have seen if I would have taken a look at this a little bit longer, is that I'm actually seeing, let me see here. I'm actually seeing no, I'm not. I was going to say a head and shoulders on a slope downwards, but this left shoulder is definitely higher than the head, so that would not qualify as a head and shoulders as far as I'm concerned.
Yep, I'd agree. You want to zoom out a little bit? Just scroll out so we can see if there's anything else going on.
Looks like maybe a big W down here.
Yeah.
Big W reversal up into the bear channel.
Yeah, what you would have wanted to see is when it had that kind of handle action after the W, you would want that to break through and confirm to the upside. That would be the reversal. Here it maybe failed to do so. So it will be interesting to see. And then I would definitely say that, so here's a question for you, is 8260, is that a clearly defined area of horizontal support for you?
8260. I think I would need more than one. Oh, if I zoom out farther, yes, it would be.
Yeah, I think that's a very important area of support right now, and I think that's also where your descending triangle, the base of it is. So that is definitely a horizontal I would be paying attention to personally.
And one of the things, I can already tell you one thing I should have done. I should have examined the chart before I just pulled it up on the fly, because these are the types of things that I would have been armed with as information going into trading, instead of trying to figure it out on the fly like I just did. So I think that's also important as well, as to kind of do the prep work before you actually decide to sit down and start trading.
Absolutely. Always, before you enter a trade, you should be absolutely having, like Peter Brandt talks about, he's a pilot, and like how pilots will have checklists of, like there's all these different things going on, all these indicators and gauges and all that going on. And it's super, super easy to forget something if you don't have a checklist that you go through every single time, where it's just like A, B, C, D, E, F. For Gabriel, it's maybe 1, 2, 3. First, do we see any patterns? Second, do we see any horizontals? Okay, now we're ready to go ahead and pay attention to the parabolic SAR and the TD sequential. And then if you don't have that process, then you'll definitely find yourself in situations where it's like, man, if I just would have looked for horizontals, I would have kept myself out of this losing position. And that's what you want. Is most people, they look for any entry under the sun. If the 15-minute isn't providing an entry, they'll maybe look at the hourly or maybe the 4-hour. It's like they like have to trade, a lot of people, and they're just only looking for reasons why I can trade, reasons why I can enter. And what you really should be doing as part of your process is looking for reasons to stay away. Like, it's very easy to implement the sequential. It's basic, it's straightforward. A 12-year-old could do it. But how you could really make improvements to that is figuring out not the entries that you take, but the entries that you don't take. And if you have a process of going through, say, patterns and horizontals that say, I'm not going to sell a 2 below a 1 if it's at horizontal support, well, that can really, really go a long way to add to your return. So when you're going through any sort of process up front, definitely have the mind state of looking for reasons to stay away, opposed to looking for reasons to pile into a position.
And so a couple of interesting things now that you were bringing that to light, which is an excellent point, and that is exactly what I should have done. I should have taken 5 minutes, looked at this chart. I would have seen some of these more obvious patterns. And of course, because we did see the descending triangle on the 15-minute chart, it was almost a given that there was going to be something resembling a descending triangle to be drawn on the 3-minute chart here. I think this is too large scale of a pattern for me to say that I would just avoid trading completely in this entire area. What do you think?
That's interesting. And that's something that you would definitely have to define more objectively. And that's something that Peter Brandt's really good at, is he will only trade patterns that are meet certain time requirements. So for example, if descending triangle forms over 10 days, that's irrelevant. Peter Brandt's just thrown that to the side. Whereas if it forms over months, now we have a real pattern that is, worthy to trade for him. So he's very objective about the size and length of patterns and when he's going to stay away due to them not developing over a long enough time. So for you, if you're going to say that patterns are a no trade zone for me, but if they're really big patterns, then I can trade inside of them. That is something that you will need to define and be as objective as possible. And Bitcoin's been a perfect example. Over the last 3 months or whatever, it's been forming a descending triangle with massive moves inside of it. And it's been a long time that it's been forming this, and the moves have been big, like going from 9,000 up to 11,000, where there's a lot of money to be made on those moves. For me, I'm not interested in trading swings inside of a pattern. I'm more interested in getting entered into areas where there's really tight consolidation. When the pattern gets close to completion and the consolidation gets tighter and tighter and tighter, the risk reward just gets better and better and better. So for me personally, I look at patterns as no trade zones for the most part, depending on what I'm trading. And it wouldn't matter how big that pattern is. I would still, if I can identify a pattern and we're stuck inside of it, then I would view it as an area of consolidation, and I would not be interested in trying to swing trade inside an area of consolidation. So that's well, I can use a caveat there and say, if I am going to be trading inside of patterns, I want to use range trading strategies and not trend trading strategies. So that is something that potentially, if I identify a pattern and I see some really clear areas of support and resistance, and I'm able to implement a range trading strategy, I might go ahead and do that. But in terms of using my same trend trading strategy inside of a pattern, even if it's a massive pattern, I'm not interested in doing that. So I'm not sure if that answers your question, but I think it's something for you to definitely give some more thought to.
I agree. And that is, by the way, I'm glad you brought that point up, one of the reasons why I structured my 3 rules the way I structured them, because pattern trading is excellent trading within ranging markets, and the sequential, well, pattern trading and more so, I guess, pattern trading and understanding significant areas of horizontal support and resistance are excellent tools to use. And by the way, our SAR just got triggered by that giant Mazubozu. Is that what you call him?
Marubozu?
Marubozu, there you go.
Amazing.
Yeah, look at that. What a dick move that candle just made.
I mean, that channel is sure doing nicely so far anyways.
Yep, it is. So But yeah, anyways, back to the point that I was making, at least I think I was making, is that chart patterns and horizontals are great for both identifying and giving you a place to actually enter into a position inside of a ranging market. And the sequential is obviously excellent for a trending market, but it's not so great when you are within a ranging market. There's certainly scalping to be done, but it's not the most effective trading system. So I like how they complement one another in that you can identify a chart pattern and or a horizontal support or resistance area. And then once that pattern or that support or resistance breaks, oftentimes you will begin to trend, at least for some amount of time. And that's when the sequential can come in and be very effective. Would you say that that is overstating it, or is that a pretty reasonable conclusion?
That's quite reasonable, I would say.
Okay, so yeah, that's kind of another thing that I have thought about a lot with those. And for example, this descending triangle just broke, and I think if someone wasn't necessarily trading the chart pattern itself, you could still use that chart pattern to say, okay, now I'm going to be looking for an entry on the TD sequential. And given the target of a large descending triangle, which this one was like $4,500 to the downside.
So is this an entry that you're going to be taking?
I would want to see some follow through out of this bear channel.
Okay. And
so
when you say
I would want to see a close
through
outside of this bear channel, and then I want to see a green 3 trading above a green 2. So I'm going to go ahead and prepare for that, because that's going to be a pretty large range where the stop loss meets the price.
Yeah.
So we can say that we'll call that the height, and we'll say the SAR is going to probably print off about right here, would you say?
Looks about right.
Okay, so let's go over here. We were obviously triggered out of our position. Hashtag triggered. So
did you get the limit order?
I don't know. I'll check that in a minute. I don't have time. This math stuff's going to fuddle me up. All right, I need to focus.
It's sure a lot of fun watching Gabriel do math, I'll tell you that.
So 2% of our bankroll is an even 0.01 Bitcoin. 2% is going to be obviously an even 0.0002. And then we have our percentage here, expressed it as a decimal, 0.0064. So we divide those two by each other. We put a calculator here. 0.0002 divided by 0.0064. 312 contracts is what we're going to be looking to enter here. Am I doing good so far?
Yep. And if it was me, I'd go ahead and just enter the order right now.
Yep, that's what I'm going to do.
Nice.
So 83.60 is the price. Do a limit.
And this would actually be a stop limit, since the.
Oh yeah. Trust me, when I'm doing this on the daily chart, I know what I'm doing. I've entered stop limits and stuff. It's just on the fly. It's like everything's flying at me at the speed of Sawcruhteez.
I totally understand, and hopefully the audience does as well. It's really move quite fast, and that can be definitely be a little bit stressful. So
let me interject this here just to remind folks: make sure close on trigger is unchecked when you're entering your stop limit order.
So this would be a stop limit order to long. If we do break above that 2, like Gabriel outlined, then this order would be triggered. If we never break above that 2,
trading is suspended.
The instrument is closed. Trading is suspended. What in the world?
Getting all kinds of weird stuff today.
Yeah, I think BitMEX recently had an update, and they must be having some buggy issues.
But I'm sorry, I cut you off. Please continue.
No,
you were sharing with people about the close on trigger. Significant.
And it looks like you have an order there now. Yeah, your order is there. So we got filled. So, yep. So as soon as that 3 got above the 2, that triggered his order to go ahead and enter long with a stop limit. If you enter a stop limit above the price, like so you're looking to buy a breakout, or you're wanting to buy a 3 above a 2 or a 2 above a 1, what you can do is enter a stop limit order just slightly above that two or that one. And if the price gets there, it will trigger your order, and then you'll be the first in line to get filled, basically. And if it doesn't get there, your order is never triggered and you're never entered. So the only way that that order is filled is if our entry was actually signaled. And then once it was signaled, instantly we got an order there on the books ready to go ahead and get filled. And that's a good way to...
acting as resistance. Wow.
That's incredible. Wicks above, and now coming back down.
Okay, folks, I'm entering my stop limit order as a sell stop. I made sure I click close on trigger so this does not open a new position. And then I'm going to go over here to stop market and enter the same position, only at a slightly lower price, $3 lower, so if my limit doesn't get triggered. And I also have close on trigger here. Click it in. And now you can see I've got the potential to actually get paid the maker fee on my exit if we get triggered here. And then I'll make sure I get out of the position if the price starts to run away from me.
Excellent. Yeah, this is interesting. I'm seeing this action. So we do get a higher high. So that is important. When you've got a channel, you wouldn't want to see, if it's a bear channel, a higher high, because the channel, what it's really illustrating is the lower highs, lower lows. And then you have best fit lines that, connect it. And usually you like seeing it in a parallel. So seeing that this did create a higher high makes me inclined to think that the bear channel is going to get violated, but that's just a little bit of input that really doesn't matter what I think. What matters is what's being signaled, and it can be frustrating if you have entries continuously signaled and you're continually getting stopped out, and that is what is very, very important to learn how to deal with that. Basically, maybe outside of risk management, the most important factor of learning how to trade is learning how to lose. If you can learn how to consistently lose and lose small and keep coming back, then you're in a position where you basically have what it takes to win. So definitely like that, Gabriel, he had just gotten stopped out and he didn't hesitate to go ahead and enter that order once we've got the confirmation he was looking for. And I guess what we could have done, since you were wanting to see that 2 close above the channel, and we went ahead and entered that order preemptively without considering the idea that we could get a close below the top of that channel and then have the 3 break above the 2. So what are you thinking about that?
You are 100% correct. I was actually thinking about that right now. So, and let me just say too about in regards to what you just mentioned, I am a huge loser and I always come back for more. So I've got everything covered.
You got what it takes.
I absolutely have what it takes. It's the first time in my life that's actually worked to my advantage. So I'm pretty stoked. Yeah, I think you're absolutely right, though. I think I just discounted the fact that we would possibly get the 3 above the 2 and still not close above the channel. So it's absolutely a feather in the cap of a lesson. And I'm going to push back a little bit as well on what you just said a few moments ago. I do not consider that we have gotten a higher high. I really only care about the closes of candles, especially in crazy crypto trading.
Interesting. Yeah, and I definitely do view that as a bit of a signal of strength, because if there's really bears in control and we're really moving down, then that means that the sell orders should really start moving down in a pretty orderly manner, in terms of the lower highs come from the supply moving down and kind of getting a little bit of front running, where bears are wanting to maybe sell a bounce, and then every time that the bounce comes, the price that people are willing to sell at goes down and down and down and down. So if you're able to wick through some resistance, and instead of the resistance moving down below the prior high and holding strong, where no matter how many buyers came in, there were just more sellers waiting. That's a lot different to me than actually seeing some wicks poke through that resistance. It tells me the resistance is getting worn down. The sellers are maybe losing a little bit of interest, and yeah, so I do consider it a higher high, even if it's just on a wicking basis.
Okay. And look, it's playing out in your favor right now. So I guess our favor, since we're trading together. It doesn't have to be adversarial, but you know what I mean.
So what about, would you be looking to take any profit at the top of that descending triangle?
I'm glad you mentioned that, because this actually brought me back to the larger point. So I definitely agree that if you see a larger pattern, then you wouldn't want to be trading in the middle of it at all. And I don't know how to reconcile this yet. So I'm going to be the first one to say at this moment in time, I don't have a good answer. I don't have a good rule. But it just makes me think that there tends to always be a larger pattern if you zoom out far enough. And there has to be some way to, like I mentioned, reconcile. If you're just looking to, like let's say you're looking at a yearly chart. Well, the daily chart would be the equivalent of scalping on the 3-minute chart versus the daily chart. Should I only consider what the daily chart is doing when I log in to trade the 3-minute chart? Because that wouldn't really give me a whole lot of opportunities to trade the 3-minute chart unless I was in an actual unless I was in an actual trending market, because there might be a chart pattern dictating that I shouldn't be trading this market at all. So I know that I don't have an answer, but it definitely seems like something that I'm going to need to think about, because I don't see any reason why I shouldn't be 3-minute scalping inside of this much larger pattern that's occurring right here. But I can also see what you're saying is there's, really, it's ranging right now. You're not getting a trend in any clear direction, but these moves are huge. If you can basically get in on a red 2 below a red 1, for instance, towards the top of this channel, there's a massive amount of profit to be made on the way down.
Yeah, absolutely. I would agree. And definitely something for you to think about more. And I'm sure you'll come up with an intelligent solution that we'll be able to talk about more. I would say that using higher time frames is generally a good idea, but not too different from what you're wanting to do. So if you're wanting to trade the 3-minute, the daily chart is completely irrelevant, and maybe would go up to as much as like the hourly. And generally, like maybe the 3-minute and the 15-minute do seem to have a pretty good relationship together. So definitely having a clear idea of which time frames do matter, and which ones can just be entirely disregarded. And then also just basically what some of these things that you are coming to and starting to have to think through and come up with better solutions are really good examples of why, when I was working on the sequential and putting all that together and trying to see, is there any way that I can improve this? And when I looked at horizontals and patterns and maybe the ADX to help identify no trade zones based on ranging markets, it always added too much subjectivity and didn't bring much benefit. Like the benefit that I was able to get out of using patterns as no trade zones was often it wasn't worth it based on how much subjectivity it kind of added. So yeah, that was an area where I was interested to see if you'd be looking to profit take at the top of that boundary, because that's definitely one that if I am deciding that I'm wanting to trade in this environment here, then I'm definitely going to be wanting to take profit at the top of the triangle and as well as at the bottom, whether likely just partial profit. That's what I would be looking to do. So I'm curious what you're seeing.
You're seeing me change my stops, because I do agree, if chart patterns are going to be important, then that's absolutely what I want to be doing. Is if I'm going to trade, if I'm going to scalp inside of a larger chart pattern, I have to trust my number one rule, which is, what is the chart pattern telling me right now?
Yeah, I think that's important if you are trading inside a pattern to like a clearly defined pattern, specifically that it is being used as areas to basically profit take. And that's something that I did when I was trading the Sawcruhteez is I recognized a pattern and measured the target, and then went ahead and took some profit at that area. So it looks like Gabriel had to step aside. I am curious to see. So are you moving the stop up for the entire position? What do you got going on here?
Yeah, I moved the stop up for the entire position, so we are completely exited right now.
Interesting. Okay.
Yeah, I got out at 83.92.
Okay. Nice. Well, good way to go. However, I would have personally just done half or maybe a little bit more. I like to keep, if I've got a profitable position and I'm looking to profit take in this area, what I would be looking to do is take half profit and then move the other half to break even, or maybe that is my rule basically, is when I'm ready to profit take, I take half profit and move the other half to break even. So that's how I would have preferred to handle it, but I like that. I like taking full profit up here. I mean, we're at the top of this range and we're in a profitable position. Taking full profit here makes a whole lot of sense as well. It's just something that I'm not generally doing personally very often, is taking full profit in a position that's moving in my favor. I'm trying to find a balance of letting this thing run versus not giving it too much of a chance to fully reverse on us.
Now, this is also an instance where I would be extending this pattern out because there's plenty of wicks to play with on the top of the trend line, and a close outside of this pattern, outside of the descending trend line, would 100% violate the pattern as far as I'm concerned. So in order for me to still consider this a descending triangle, I had to move that trend line so that this close stayed within the boundary. Does that make sense?
Yeah, definitely would be adjusting that myself. And then what I also do is when I'm seeing some wicks, I would add another trend line on top as like a wick zone type of situation. So if you pull up the trend line tool.
Yeah, let me shrink the screen here a little bit so we can get that in. Okay.
And then
you want to connect from all the height of the wicks?
Nope, I'd start at that wick you're at now, that middle kind of wick where it really gets out.
Right here?
Yes, and then I would look for a parallel line that connected with that next wick. So what I would do is really start it lower, not on the top of the wick, but maybe start it on that red wick. Really what I would look for, what's important to me, is like a parallel line, and then that looks pretty darn good. That's kind of how I would have it, as just like a wick zone, basically, where it's parallel to the top of the descending triangle and no closes are getting up into that wick zone, but multiple wicks are. So that's kind of how I like to handle that sort of situation. What about are you what do you think about Henkinashi candles? Are you using those on a regular basis, or do you prefer the regular candles?
I'm not a fan. And it's very possible, just because I don't have enough experience with them. I've tried them out. I prefer traditional candlesticks because I really value candlestick patterns. It's not something that's in my 3 rules, of course, but I highly value the information that they give me. They can cause me to tighten a stop loss or adjust the position size, or just simply, maybe even, it's something that I might even consider at some point adding to my rules, which is if I see a shooting star candle at the top of a pattern, then it is a time to take a profit on a position or something like that. And then you just don't get those with Henkinashi. And I find the Henkinashi a lot of times, especially on smaller time frames. And again, this might just be ignorance of the candlesticks themselves, but I find they operate a lot like Consensio on the lower time frames, which is they're just often late to the party. They seem like they're at their best when you're using them on a higher time frame, like the weekly chart, just like Consensio. And again, I don't know if that's right or wrong, but that's just what I've kind of noticed.
Very interesting. I certainly haven't noticed that myself. And as a matter of fact, I've kind of have the opposite thought, that I think that they're one of the first to the party. A lot of times when you get a Henkinashi color flip, a lot of the times that will occur before almost anything else. So yeah, I definitely, you've given it some thought, and there's no reason to go with something that doesn't resonate with you or doesn't work well with you. So yeah, definitely stick with what you like. But for me, I definitely, and in even like on the lower time frames, I feel like I almost have to have them on lower time frames compared to higher time frames. I don't feel like they're as important. So I would be interested just to see what this chart looks like.
Now, we would have done that. Heikinashi would have told us to exit on the 9, but we still be looking at a bullish candle. This next candle would probably be either the spinning top or just a straight color flip with a spinning top.
Yeah, or it just blows it out. I could see, yeah, for me, I like candlestick patterns as well, but I think Henkinashi candle setups are more important or more reliable, and there will often be times where you get some sort of reversal candle on traditional candles, but the Henkinashi are showing that are disagreeing, and this could be a situation where Henkinashi candles say that it's a strong trend as long as we have those flat bottoms. So those HA candles are still showing this as a very strong trend and isn't showing signs of exhaustion, whereas the traditional candles are starting to look that way. So, whatever happens here is really irrelevant with a sample size of 1, but just using the Henkinashi candles, I would be inclined to think that we are ready to just basically continue upwards, since they still have flat bottoms on every single candle.
All right, let me push back a little bit on that there, and I think this is going to butter your toast when I give you the explanation. I think that introducing the Heikinashi candles is only giving added complexity to a situation where I already have 3 rules.
Interesting. And I would take the other route. I think that Henkinashi candles are simpler. They're based on averages. They decrease noise, and specifically, if your rules don't have anything to do with candlestick patterns, then it could make it more confusing to see a shooting star and not. And then, you really think that it's going to reverse, but it doesn't matter. It's not part of your rules. So using Henkinashi candles, that's one of the reasons why I like them on shorter time frames, because a lot of the candle patterns that happen on shorter time frames aren't very reliable. And the Henkinashi candles tend to do a good job of not, I don't want to recognize, shooting stars if I'm not using them to trade. So I'm of the mind state that Henkinashi candles would decrease noise and make it simpler versus just traditional candles. And you can even take that a step further and say, like a line chart. If you're not really caring about the open, high, lower, close of a candle, then a line chart could make things a lot smoother and less noisy.
Oh yeah, well, I sold the top. Did you?
Well, we'll watch this blow out the top, and I would still have had half my position.
You know what that's the equivalent of, don't you? I won the pot, didn't I?
Yep, that's definitely good metaphor to poker players who don't really care about the process or the performance. All they care about is getting lucky and maybe winning the pot.
Well, crap. Apparently, I didn't sell the top.
It looks like the HA candles were right again, not showing signs of exhaustion despite being on a 9. That's pretty interesting. So looks like we might be ready to re-enter here. If we get a 2 above a 1, I guess take a couple candles, but will be something to keep an eye on. And this is a good example of where I'm a big fan of taking 50% profit and leaving the rest in play, and then using that SAR to trail. When the SAR is this far away from the price, it tells me that it's still got plenty of room to go. When the SAR gets really tight and close to the price, then it tells me we're probably at a point of exhaustion. So when we were testing the top of that triangle with the SARs way below the price, I would have been really interested in taking just a partial profit and then using those SARs to trail.
Yeah, this is getting interesting right now, that's for sure.
Sure enough, and now we've just taken out some significant levels, some significant higher highs here with looks like could be an area where price is ready to bounce. And then notice the HA candles, how they would have gotten you right back in right before this big move. If we took that 2 above the 1, we would have got right back in, and potentially if I took 50% profit, could have put that back in on that 2 above the 1, and it would have been basically at the same price that I was selling. So just definitely a good example of why I'm a proponent of those candles.
So I guess we are going to be getting back in here.
Don't ask me.
God damn it.
And we have been going for a little over an hour, so it's quite all right to call it a day. If you want to get back in, then that works too.
This is almost embarrassing. All right, I'll go a step further. This is embarrassing.
Who sold the top?
I need this in the next 5 minutes to just come crashing back down to 8,400.
So question, breaking out of the top of a descending triangle, do you now say that the descending triangle is invalidated, or would you actually use that to measure a move to the upside?
Yeah, it certainly looks like this could be a reversal descending triangle. Absolutely. And as a result of that, I would have, if I was trading this on, say, the 15-minute chart, measure,
and maybe see, now it's just amazing how much different patterns look with HA candles, and they just look so much cleaner to me. That now we could potentially look at this as a symmetrical triangle. If you move that base, the bottom left base, down to the very bottom of that wick, kind of to the left, and then we could probably have, yeah, fascinating. I much prefer that interpretation. And then even when you had the 3-minute candles on, I noticed
that better. Just disregarding the wicks and going like that.
Yeah, either way, both work really well.
Yeah, something like that.
Yep.
That's some good food for thought, my friend.
And what would the measured move on that be? $200 basically from 83.60, we'll call it. So 85.60, and it almost got up there already. Definitely interesting. And then go back to the 3-minute chart with those HA candles. And could you put that full screen?
Yeah.
Okay, and then just zoom out a little bit. So it looks like a bit of an inverse head and shoulders with that low, the most recent low that tested 82.59. And then we have a higher low to the left of that and a higher low to the right of it. Retrace on the right a little bit further than I would like, but still looks like a pretty darn good inverse head and shoulders. And it's interesting to see the just watching the difference between the HA candles and the normal candles and how much they affect the TD count, as well as how just well those that illustrates a trend using those flat bottoms. And not, even though we did get reversal candles on the normal candles, HA told us to disregard them, and that's a big reason why I'm a proponent of them. Is I find that the signals from the HA candles are more reliable, and that makes sense because they're taking into account more information. They're using moving average as opposed to just what's happening here and now. Just some food for thought there, and it sounds like we're probably going to go ahead and wrap this up.
Can I ask one more question before we get off?
Yeah, and then I will take just a quick look at some charts since I haven't been doing really any analysis lately. I will just pull up a chart real quick myself.
Okay. So when you're using the Heikin-Ashi candles, for instance, for the TD sequential, let's say you've got your green 2 trading above the green 1, your price would be 83.93, right?
Yep.
But that price that you're looking at, this Heikin-Ashi candle might be telling you that it's trading above 83.93 right now, but that's the Heikin-Ashi price, which is different than the regular price. So what happens if you go over to BitMEX and price is not at 83.93 yet?
I would just put in a stop limit order at 83.93.
So you would always go purely by the price that the Heikin-Ashi candles are signaling, even if those aren't matching up with what the actual candlesticks are telling you.
If I'm trading the Sawcruhteez, yeah, absolutely.
What if you were trading the chart pattern?
I think I would prefer Heikin-Ashi candles when trading chart patterns, because for me it makes it a lot easier to see and identify chart patterns. And I've also noticed that the boundaries that get put in tend to be a lot just better. So basically, if I'm trading patterns, I am very attracted to the idea of using HA candles, and then basically just deciding whether or not you want to wait for a close to go ahead and have the pattern confirmed, or if just breaking down on an intra-candle basis is enough for you. It should be I would still basically do the same thing where I'm using the HA candles to identify the pattern boundary, which will be different than traditional candles, and then I'm going to use the boundaries that I'm seeing on the HA candles, and therefore I'd be using those candles to identify entries. Does that make sense?
Yeah, so for instance, we're using the Heikin-Ashi candles for this break right here. We would be looking at 84.15 as the entry, because we've got a close and then we've got a candle following through if we were trading this purely as a chart pattern.
Yep, and that would come down to what your rules are for, do you need a close and then a follow through? Do you just need a close? So that would come down to how you prefer to trade, wait for confirmation. And for me, I'm generally just looking for a close, depending on how big the pattern is and what time frame it is. But waiting for that next candle to break through the high or the low definitely makes a lot of sense as well.
All right, go ahead and pull up your charts there, stud.
All right.
Click stop share.
Yep.
All right. There's my ugly mug.
Hey, we got both of us here today. Last time it was just one of us. Let's see where I should put this damn thing. Son of a bitch. It's too big. Okay, so we can just see the boundaries that I was drawn before. So maybe take a look at your process with and I do want to clarify that in general we do want you want to prepare and ahead of time to look at all the different angles on your chart and that sort of thing, but for this I do really like the idea of starting fresh and coming in and really sharing the whole process with everyone else. So potentially maybe felt a little rushed today, but in future I would say to before we do these shows to not prepare, so that we can go through in real time and see what you're doing and see if there's maybe any mistakes or any areas to improve. And here's maybe one where it did look like some pretty clearly defined horizontals to me. That,
by the way.
Say that again?
I'm still seeing your face.
I'm not sure. Everything looks good on my end.
No, I'm seeing it. It's up now.
All right. So yeah, here we do have some clearly defined horizontals that potentially could have been paying attention to. And if our rules tell us that we don't trade inside patterns, and we also don't trade inside horizontals. Potentially, we shouldn't have been taking any entries or exits today based on that we were in these horizontals and we were in the descending triangle. But like Gabriel said, I mean, these are significant swings, a lot of money to be made in this area. So that's something to consider a little bit more. Do you think it's best to have that caveat of patterns and horizontals, or is it best to maybe try to simplify it a little bit more? Okay, so definitely wanting to look at this action here just on some lower time frames really quickly. Not a whole lot has changed from yesterday. We did end up, we have been consolidating here sideways, and what I was looking for was a return to the 50-hour EMA. And can there be a better place for that?
By the way, on the 4-hour chart, would you call that a bear flag? That's what that looks like to me.
Interesting. We can take a look. It wasn't jumping out at me like that, but we can certainly take a look. So yeah, we've been looking for a return to this 50 EMA based on how far extended we were from it yesterday. Provided really, strong evidence that we should return to it either through some sideways action while this continues down, or a nice bounce up and into. And from what I can tell right now, it doesn't look like we're getting that bounce. It looks like we are basically stuck in this range. And right now we're getting a little move. We just it looks like cracked through that 84.40 resistance. So seeing if it does stay up there, then I would be looking for a return to about 8,700, at which point we would have this moving average trending down and kind of in line with horizontal. That would be a pretty interesting, I think that would be a significant area of resistance. Wouldn't be really looking to sell all the way down here myself, but that is something that I would be keeping an eye on. And Gabriel was wondering if the 4-hour looked like a bear flag to me. So let's just take a look. I think that this definitely doesn't look like a bear flag to me. I'm not saying it won't turn into one, but it's still just not enough there for it to be a bear flag as far as I'm concerned. Maybe if we get like something along these lines, then it could turn into one. But at this point, I don't think that what we're seeing is enough to consider a bear flag. And the patterns on the higher time frames are going to be difficult to tell. But if we do zoom it into a little bit of a shorter time frame, now it kind of does look like a bear flag. Not sure.
That's one of the things, if I could real quick interject, is that I've noticed that as I am checking more time frames with more regularity, I can begin to see just by the action on, for instance, the 4-hour chart and sort of extrapolate that and think, okay, that looks like it could be a bear flag on the 15-minute chart or the 30-minute chart or something like that.
Yep, definitely. When it looks like maybe something's developing on a higher time frame, zooming into a lower time frame and seeing if it has taken that shape is definitely something to that can be of use. So I'm kind of penciling this in because I do see this trend line does seem important. This guy, I mean, it's already broken, so we can just go ahead and basically do away with that.
That trend line to that where the price just broke at about 8,500.
Say that again.
I would connect that up like how you just had it with the bear flag, except connect it to that recent spike.
Yeah, reasonable.
We've got 3 touches on one line and 2 touches on another. If price comes back down and touches that trend line on the bottom there, I think that there's definitely something reasonable to consider. I would consider that because of the length, though. I forget what the exact stuff I'm reading about is, but it's starting to get into the point where there's too many candles for you to really consider it a bear flag. I would start to consider that a symmetrical triangle.
Yeah, and I wouldn't be inclined to do that myself. Because so what happens if this next one kind of comes up here? We just kind of keep adjusting. I don't really like it. If it wasn't very clearly defined before, I don't like just moving it to a new one where there's just that one kind of touch point that we never could have seen that ahead of time. If it's just not something that I like doing. I am kind of seeing that potentially we are developing a new bull channel with these higher lows and potential higher highs. So really not a whole lot has changed from yesterday. We did not throw back to retest the bottom of the triangle, at least as of yet, and we're definitely going the more bearish route. I outlined 3 options where we could throw back to retest the bottom of the triangle, we could throw back and blast right through, or we could just continue downwards. And this action is making it look like we are ready to basically just continue downwards. And the reason why I say that is because of what we're seeing on these lower time frames, where we have found support and we're kind of consolidating, but we're not getting a bounce. So I do think that if this was going to get, the longer that it consolidates sideways, the more bearish it is, and the less likely it is to get any sort of bounce. So basically, as we continue moving sideways and staying stuck below 88 and above 82, I am going to just kind of expect that to continue. And if I was to just show what I think is going to happen from here, it would be something along these lines right here. Something like that, where we go back to retest 88 and then we come back to 82 and then maybe go ahead and create a lower high and break down, because it is starting to potentially look like some Wyckoff type of stuff going on here with like a potentially a redistribution occurring. And if this was to happen right here, then that would definitely, if this continues moving in this sideways range and then gets a lower high, at that point I would be able to probably identify it as a redistribution event. So that's what I think is most likely from here, but really can't say much more than I said yesterday, because basically we're still at the same exact spot. Not a lot has happened. So that is really all that I've got for just a quick little update. I will stop the share. I will say what's up to Fibbo Swanee. How you doing, bud? Appreciate the lesson that you gave me on Fibonacci's. It's definitely been something I've been paying close attention to as of late, and really enjoying. Actually, that is one other thing that we could look at, is how those Fibonacci's really have been working out rather nicely on this action here. And we did take a look at this Fibonacci yesterday. Let's go back to the normal candles. And let's get this out of here. And this out of here. So yesterday we were looking at, I can't remember exactly how it was drawn. I think right here is where the move started, and right here would be where it ended. So what we were looking at yesterday was the price resisting 0.382, and then it looked like it was getting above, so I said to keep an eye on that 0.5 level, and sure enough, we went up, resisted that, and then fell back through the 0.382, and potentially this could be drawn a little bit differently, but we can tell that when markets are ranging and they move sideways, they really like to respect the Fibonacci's as far as I can tell. So anytime we get a big move like this and then consolidation happens afterwards, is a good time to go ahead and throw on Fibonacci to get a feel for breaking this 0.5 level is that's a big deal to me. That means that we are ready to kind of at least test 0.618 and maybe get all the way back up to throwing back. Whereas when we resist and we fail to get back above there, now we can keep our eye on kind of moving back down the ladder. It's just kind of, it's kind of like a ladder where if you fall down one rung, you expect it to fall down another. And then if you find support at that rung, you would expect it to go up again. So it was neat watching that really find pretty darn clean resistance right at that 0.5 level and then dance around this 0.236. So now would be keeping an eye on a return to 8,600 based on that 0.382 level. And stop and share again. And just want to say thank you to everybody for tuning in. I think this was definitely a good episode. There's a lot to learn when we are really zooming in and trading these really low time frames. It really helps to speed up the learning process. And just in the last few weeks, I can tell how much Gabriel's trading has evolved, and I expect that to continue. And that's mainly because he's starting to really get that experience of that deer in the headlights feeling of, man, I don't know if I should be entering or exiting here, and maybe that means my rules are a little bit too subjective. And each time that we have done one of these shows, it seems like he has simplified his approach, and that is something that I really, really like to see. He's not just blindly doing what I'm telling him to do. He's thinking about it for himself, and he is reasoning through. If I tell him something, he's thinking about it and reasoning through it. He's not just blindly doing anything. So I am really happy with how this has been going so far. I hope that there are some other people out there who are making similar strides as Gabriel through watching this. And again, that's what my goal is to teach you guys how to trade such that you wouldn't even need to tune into my shows anymore, because you're sufficient enough to do your own analysis. That's really my end goal for everyone out there. So hopefully this is helping to accomplish that. And thank you, Gabriel, very much for taking the time to be here today and for putting yourself out there, for challenging yourself in a public forum. Definitely a lot easier said than done, and always really appreciate your input and bouncing some ideas off of each other. And so thank you again. All right. So with that being said, I will go ahead and call it a day and get some links in the description. Like Gabriel mentioned, he is on Twitter and YouTube, and then also just saw a neat thing on TradingView that kind of surprised me. Just yesterday, I think I logged on and saw under top authors for XBT USD, Crazy Gaby right there, right at the top. And I have been wanting to see myself up there for quite some time, and I don't think I've ever made it. So color me a little bit jealous, and way to go for being one of TradingView's top authors.
Yeah, that's bittersweet. It's actually really funny that you said that. I got a message this morning that all my posts got deleted on TradingView, and that if I post again, basically with one of my YouTube videos in the link, that I'll be getting banned off the platform. So I actually can't post on TradingView anymore. They said I either have to use their native video service, which I haven't found any way to take the native video service that they have, save it, and then upload it to YouTube, because I would be willing to do that. But they basically make it so you have to record on their platform if you're going to record a video. And that means I would have to record the video twice every day, which would just be too much hassle. So I appreciate the nod. I'm glad I got up there, but apparently my time up there was short-lived. And I'm sure now that you mentioned it, that is probably what got them to actually take a look at my account in the first place. So all that hard work I put in is what ended up getting me banned from the platform, essentially.
Well, I would, we'll just stay on afterwards. There might be a solution I have for you, but this has gone on long enough, and I will go ahead and be ending the stream. And thank you guys again very much for tuning in. I will be back at you tomorrow with a price action podcast, just going over the recent price action in crypto, and hopefully we'll have some time for stock market and gold as well. So thanks again, Gabriel, and we'll look forward to catching up with everybody.